VingeGPT.com.
Welcome back, investors. Welcome to a new video. This video will be actually, so we are August 2024, 15th to be precise, and I mean, for the investors in the room, you know that every 45 days after quarterly closing, Warren Buffett has to publish a 13F report, as they have more than 100 million assets under management. So we're going to give you an update on latest movements on Berkshire Hathaway's portfolio. So actually the video has three parts. So the first part will just be about the movements in, out, and new positions that they have taken in their portfolio. The second one will be actually on those companies, or some examples of the companies that you're gonna be seeing where they have sold the securities, where they have bought securities, is how to use VingeGPT and to do the analysis using VingeGPT. And then the third part, for those who like to read financial reports, they're going to be showing you how to read the latest financial report from Berkshire Hathaway, so the latest quarterly report. So let's go into it, and do not forget to subscribe to our YouTube channel as well. Alright, so let's start with the positions that have been sold by Berkshire Hathaway since, in the second quarter 2024. So we're looking at the period April 1st to end of June 2024. So I've put you here I hope, comprehensive table that summarizes the main negative movements, so what they have been selling in terms of positions in the portfolio. So what you see actually, and that's the highlight of this quarter, you see that Berkshire Hathaway has been taking capital gains by selling rough cut 50%, actually 49 or 33% of their Apple position in the portfolio. So they have sold for rough cut $84 billion of market value. So that's actually the biggest change. You see below the Apple line, so I've sorted this table by percentage change, so from the biggest to actually the smallest one. You see that they sold some positions on Capital One, Floor and Deco Holdings, T-Mobile US, Louisiana Pacific Corp, which is a railway company if I'm not mistaken, and Chevron, which was also one of the positions that they have taken in the utilities or energy and utilities sector, I think already a couple of quarters ago. So there they sold 3.55%. But the main highlight here is that they sold 50% of the Apple position. In terms of movements, so what has been added, so I'll start first with what has been increased, because they had already those companies in the previous quarter at least. So you see that here it's sorted in ascending order. So you see that Occidental Petroleum, which was again another one in the oil and gas industry like Chevron, so there they have increased a little bit, like 2.93%. I will not read through all the lines, but the main highlight of what they have increased in terms of position in existing securities or in existing companies is actually Sirus XM Holdings, which is this satellite satellite radio provider in the US, which is very well known in the US. In Europe, most of the people do not know Sirus XM. So there they have increased the position by 262%. So in terms of percentage, it's the biggest change, but you see that the value in US dollars is, let's say, relatively small compared to other, let's say, movements. So we are speaking about 376 million US dollars, which is, for Berkshire, that's small money actually. So that's the biggest change here. And then in terms of new companies that have appeared in the portfolio that were not existing in Q1 2024, you have two new companies, one that is called Ulta Beauty Incorporated. So they're kind of a marketplace for everything that is beauty products, those type of things. You see on the left hand side a screenshot of their latest website. For example, they are selling Sol de Janeiro, which is a brand that I know from my daughter, because she loves the brand Sol de Janeiro. I had never heard about this brand, but young people like this brand, so they're apparently selling that type of stuff as well. And then Berkshire Hathaway has also added a position, so they bought 1.2% of the outstanding shares of the Class A shares of Heiko, which is kind of an engineering company that is also doing stuff in flight operations, flight support. So you see that the percentages that they have taken are small. So it's for Ulta Beauty, they have taken 1.4% of the outstanding shares, and for Heiko, so Heiko has two types of shares or classes of shares. So they have taken 1 or 2% of the outstanding Class A shares. You see the amount in terms of value of US dollar, they are relatively small compared to the size of Berkshire. It's 185 million US dollars for Heiko and 266 million for Ulta. So that's for the movement in the portfolio. Now what is interesting is not just to know about the movement. Okay, we have seen Apple has been sold for 50% of the position. We have seen Sirus XM increasing by 262% and 2 new additions. But what is interesting if we are serious investors is to understand what are the fundamentals of those companies. So what I'm showing you here is actually how to use VinGPT and how to prompt VinGPT to do analysis on a couple of those companies that we have been just enumerating. So the first thing is we're going to be looking at out movements, so movements of selling securities in the portfolio of Berkshire Hathaway. So here you see the prompt that I'm going to copy paste into VinGPT, where I'm actually asking VinGPT to do, some people call it a chain of thought. So it's a sequence of prompts, but structured under one single prompt. You see that it's like 7-8 lines of prompt, where I'm asking VinGPT to do a fundamental analysis of Apple and Chevron Corp. So those were two companies in the portfolio of Berkshire Hathaway where the percentage has been reduced. And I want actually VinGPT to show me side by side the fundamental analysis of those two companies in a comprehensive table. And I also want VinGPT to calculate the intrinsic values for those companies using various methods. You're going to see this in the results in the video. And also, I want VinGPT to calculate the margin of safety. For those who did the Art of Value Investing training, you know that we should buy companies at 25 to 30% of margin of safety versus the current share price, so that the intrinsic value is 25 to 30% above the current share price. And also I want VinGPT to calculate the percentage immediately comparing the intrinsic values versus the current market share price. So let's go into that and let's roll the video here. So you see, well, first I'm starting with Vinge, so just saying good morning to Vinge, and then what I'm gonna do, you're gonna see me actually copy pasting the prompt. So by copy pasting the prompt, you're gonna see now me submitting the prompt, and so this chain of thought, and you see that of course VinGPT is talking to our backend. So here is the VinGPT4.com backend, because in order to avoid hallucinations, you know that VinGPT has been created on top of ChatGPT Plus. We do have many, let's say, processes and calculation stuff that is being done in our backend just to avoid glitches in the analysis. So here you see, let me just pause here 1 second the video before continuing it. So you see here actually the results of the fundamental analysis. So for those who did the Art of Value Investing training, you see like price to earnings ratio, price to cash flow, dividend yield, dividend payout ratio, ROIC, return on assets as well, debt to equity ratios, that type of stuff. And then in fact, afterwards, you remember in the prompt or in the chain of thought, we asked actually VinGPT to calculate the intrinsic value. Let me also again stop here the video. And you see how VinGPT looks at the current share price and then calculates the 3 methods that it has been let's say fine-tuned. So it calculates dividend discount model, discounted cash flow, free cash flow to the firm, and discounted future earnings. And you see actually that it then calculates, because I ask in the prompt, it calculates actually the margin of safety between the current share price and those 3 intrinsic values. So you see that actually for Chevron there is a positive margin of safety. It means that the current share price is 20.87% and 24.71% below. So the intrinsic value is below the current share price. So it means that basically there would be, and again I'm not now soliciting you to buy Chevron Corp, but it looks like that Chevron Corp is currently undervalued according to our value investing methods. And again, I will speak later on about what are the assumptions that are being used to calculate those intrinsic values. So that's for the first 2 companies. Let's go into Sirus XM. So Sirus XM, in fact, let me just go back here. So here we are just submitting a single prompt to Sirus XM, which is now, can you now perform a fundamental analysis of Sirus XM, and please also calculate the intrinsic value, discounted cash flow, discounted future earnings for the company, and calculate the margin of safety for both IV. So you see that's a different type of prompt. You see here in the sequence of the Apple Chevron analysis, I'm just copy pasting the prompt that I just shown to you on the screen. And of course, VinGPT is pulling the data from its backend, doing the analysis, doing the intrinsic value calculations to avoid hallucinations of the large language model, and it comes back with the calculations. So fundamental analysis, again, for those who did the Art of Value Investing training, level 1 fundamental analysis, and then it calculates the intrinsic values, looks at the current share price, and then provides the intrinsic value. I just asked DCF and discounted future earnings, and it calculates the margin of safety. Just one thing here, because the margin of safety looks very interesting, 42 and 46%, which could explain why Berkshire has been buying more of those companies. Just one thing is nonetheless that I do not like about Sirus XM is that the company has negative equity. You see it here in the summary of the fundamental analysis. So it's something that I've been asked upon, also related to Starbucks. I mean, I love the Starbucks brand, but it has negative equity. So that would be for me a KO criterion. I would not invest into the company. Just wanted to highlight this to you. Again, I'm not telling you to buy Sirus XM. I'm just showing you how productive you can be in your investment process by leveraging Vinci GPT. Okay, the third analysis, and we already discussed about Ulta Beauty, which is one of the two new holdings that appeared in the Q2 13F report. So here I'm showing you actually a sequence of various prompts with Vinci GPT. So let's go into the video. So you see here I started a new conversation and I'm asking, well, first of all, I'm asking, because I never heard about Ulta Beauty before seeing it in the 13F report, I'm asking Vinci if it has Ulta Beauty in its companies or in its investment universe. You decide how to prompt the model. It says yes, it has it under the ticker YOLTA, and then I'm asking actually perform a fundamental analysis of the company. You see that I don't need to repeat Ulta Beauty because VinGPT remembers the context and the prompts, and I'm asking also to calculate the intrinsic values for the company. Again, as always, it goes to the back end, performs the calculations, pulls the right data from the latest investment universe update, and then it provides a analysis related to the company. And we see that the company does not pay out dividends, and you see that it provides a certain value for the discounted cash flow intrinsic value and discounted future earnings intrinsic value. And one of the things that again I want to emphasize here is, of course, I did not provide any further assumptions when calculating the intrinsic values. So I'm asking now the model here, as you can see in my prompting, is which assumptions have you used to calculate the IV? And VinGPT is answering, because it has been pre-programmed with that. It's answering that it used 3% growth rate, 7% discount rate, and a time horizon of 30 years. And I'm asking now basically VinGPT to recalculate. I'm changing the growth assumption, and I'm asking Ving to recalculate with a 4% growth rate. And you see that, of course, it will adapt the intrinsic values, if it is a DCF or DFE, with the new growth rate. And also, I mean, and I've been discussing this a lot with my students, is what is an appropriate cost of capital for any company. Per default, the model uses 7%, which we believe is a good average cost of capital for any type of company long term, valuing on 30 years. But here, I mean, I mean, if you have followed me, you know that I've been adding, together with the VinGPT team, we have been adding industry-specific cost of capitals, and you can ask the model what's the industry cost of capital, and here it has replied that it was 9.82. And I'm asking now VinGPT to recalculate the intrinsic values using this 9.82 percentage in terms of cost of capital. So, and I'm just here again, you see, just reconfirming what growth rate it has been using, because I did not, let's say, tell again to VinGPT which growth rate to use. So you see that it kept the 4%. So just another example on how to use VinGPT, in fact, to do the prompting. Right, the third part of this video is having a look, and you know that me as an investor, I always read financial reports, and it's very important that you train your eye and that you practice on reading financial reports. I'm just showing you here the main highlights of the latest financial reports. So the 10Q report, which is an unaudited quarterly report of Berkshire Hathaway, so the holding company of Warren Buffett. So here I'll start, I mean, you know that I always start with the balance sheet and then the cash flow statement and then the income statement, but I know that a lot of people, they like to start with the income statement. So let's start with that, but I will come back to the cash flow and the balance sheet later on. So on the income statement, you see that with the red bullet points 1 and 2, that's over. So if you compare quarter over quarter, so the second quarter 2024 with the second quarter 2023, you see that the company made a rough cut the same amount of profits, so it's 30.3 billion this year, while last year was 35.9. What is more interesting, when you look at the first 6 months of last year versus this year, you see that the company has in fact generated 43 billion of profits, and so the first 6 months of last year they had generated 71 billion. So the performance was a little bit better last year for whatever reason. That's not now the point here. What is interesting as well, when you look at the cash flow statement, you see actually that the cash position, so that Warren Buffett's Berkshire Hathaway company has a cash position position of 43 billion. So that's really cash and cash equivalents. And what we want to understand as well is how has the balance sheet evolved. And again, I have started reading the Berkshire Hathaway 10Q report. I started with the balance sheet because the balance sheet, as I always tell my students, it shows in a consolidated way at any moment in time. It shows what has happened to the company. So here you see, and let's zoom in here on the equity side of the liability side of the balance sheet. So what is being compared here is the balance sheet position at end of December 2023 versus the balance sheet end position of Q2 2024. Again, unaudited figures. When we zoom in, actually there are three things that we can call out. The first one is a retained earnings. So we see that, and you know that, I hope that you know that when profits in companies happen, they normally appear on the liability side of the balance sheet as retained earnings. So there we see that the retained earnings have increased by 43 billion US dollars. We see that Berkshire Hathaway, compared to last December, has spent 3 billion US dollars on share buybacks. So that's the treasury stock that is carried at cost. And again, remember, that's a negative value in the liability side of the balance sheet. But net, when you look at the bullet point number 3, the balance sheet has increased by 39 billion US dollars. When we look on the asset side, because you remember balance sheet has to be balanced, so what are the main movements that actually reflect the plus 39 billion that we have on the right hand side of the balance sheet? So basically we see, and remember that Berkshire Hathaway has been selling for 84 billion US dollars of Apple shares, amongst others. So of course we see that the investment in equity securities, so that's bullet point number 2, went down compared to December 2023. So we see that rough cut, they carry 69 billion US dollars less in equity securities. They carry 7 billion less in fixed maturity securities. What did they do with the cash that they collected from selling Apple, amongst others? And it was not just about Apple. Well, they have invested into US Treasury bills. So you see that compared to 6 months ago, the balance sheet, so the asset side of the short-term investments in US T-bills has grown from 129 billion US dollars to 234 billion US dollars. So I mean, this is really high amounts of money. So you see that net actually, when you just make the sum of those positions, you see actually that rough cut. Remember that the balance sheet has grown by 39 billion, and you see that rough cut from those 39 billion, 30 billion already explained just by those three position and movement as well. So that's basically what I wanted to show you. And in terms of conclusion, what can we say is that Berkshire Hathaway, again, as very often, has provided solid results. And they have taken in some serious capital gains, selling a rough cut 50% of the Apple stake that they had. So that was the 84 billion share sale that took place last quarter. So with that, thanks for your attention. Talk to you in the next video, and do not forget to subscribe to our YouTube channel. Thank you very much. See you.